again. Let's start with the S&P 500. Here we are looking at the ES contract. Now, the S&P has been back and forth for quite some time. We're up 1.4% here today, Greg. As I count it, bars looking back, 1, 2, 3, 4, 5, about 10 or 15 bars. You have a lot of red candles, but now we're starting to see some green candles popping in here. Good green candle today, 3 green candles last week, couple the week before. Buying interest is there in the market. How do you read this thing?
Well, I think, back here we kind of switched to the, what we'd been by the dip for many, many. And I think we kind of got into a sell the rally mentality here, but we've jumped right back into kind of consolidation here. We did see some pretty solid selling pressure. It's come down and found this 2600 level, maybe 2590. It's found some legs here. Where we go from here, we've got some work to do to get outside of this consolidation range. As far as I'm concerned, we had a little double top action here, and that big drive down on Friday. We really need to see. We're seeing some lower highs here. We need to see where this ends up. Right now, we've got some pretty solid levels. Like I said, the 2590 down here, very solid level of support. On top, we've got to work through this 2680 and then more so the 2750 here. But we have to see where this next pivot puts in. If it can break through this trend line here, then we may have a leg higher. If it doesn't, then I would be very seriously watching this bottom to see a breakdown. If it does break either one of those two levels, then I think we're going much further in that direction.
Sure, and it could even break, obviously, either direction from here. There is some real concern by traders that you're going to get a break to the downside. Downward pressure since the beginning of the year. You had the first couple weeks up, then selling, then back up, then back and forth. Volatility is the name of the game. There's no question about it. But I like the way that you've drawn that short-term resistance point. Around that 2,700 mark, any break above that, short-term swing traders are going to be looking for a rally. Interesting the way you've got your chart set up. Every trader is a little bit different. You've got the 10, the 20, and the 50 SMA on these charts. Why do you like those moving averages?
Well, it depends on your time frames, right? Like the 50 obviously is going to be your, for your swing traders, that's going to be kind of your line in the sand, probably, between bullish and bearish, even for some investors, I guess. The reason I like to see these is it just kind of gives me, confirmation if my price action read is right. You'll notice that this thing on the way down here was following this 10 MA like crazy right up until say Tuesday, Wednesday of last week. So when it breaks above there, then it kind of gives us clues as to what might be happening. And again, that line in the sand for bullish bearish on the 50-day, I think is pretty important. That's just kind of how I use them. I don't use a lot of indicators, but I do like the moving averages. We start to see some crossovers here. We can see a lot of divergence, depending on what you're looking at. So all of those things are important and very useful in my opinion.
Yeah, and the S&P is the broad index for most of the sectors in the market. One of the reasons we look at it is because it has such a broad blend of different components to it. I want you to look at the NQ contract for just a minute, because to me, technology is such a driver in the current market that we're in. The NASDAQ is a different animal than the S&P, and it's got a relatively different chart as well. Are you seeing the same basic conditions, though? Kind of a downward pressure, support needs to hold. What are you seeing in the NASDAQ here?
Well, the NASDAQ so if we were looking at, sorry about that there. If we're looking at the bigger picture here, and I don't mean the long-term picture, but the bigger picture is, we saw this higher high here for the NASDAQ, we'll say 3.5 weeks ago. Whereas when we look at the S&P 500, we didn't get that. We're getting these lower highs, right? So I would say definitely the NASDAQ's a bigger driver, and I would say it's a little bit stronger. Now this breakdown here, if you start putting some lines on your charts here, this breakdown here was pretty significant in the fact that it was showing some weakness. However, it's kind of come down here, found a little bit of support right at a $50 level, the 63.50. It does. I still see it as a bit of weakness, but I would say that it's slightly stronger than the S&P 500, just from my estimation. Pretty big day today, up 115 points. So that's a pretty solid move. It's starting to work its way back up, but again, it's running into the same thing. I drew a double top on the S&P there, and you can do the same thing here. So it's got some levels to work through to see where it really wants to end up. But really, you could also make the case that it's just in a 2-3 month consolidation here, right, between the 7,000 and say the 6,400. So.
Yeah, obviously, the FANG trade, Facebook, Apple, Amazon, Netflix, and Google have been driving the market for quite some time. The big names, the ones that are very popular, they're very high PE ratios. And if the market does go through a much bigger correction, volatility in the NASDAQ could get pretty severe. I like the bottom. I like the technical analysis you drew there. Keep an eye on those levels, guys. Every trader, and I do this every day. I do it by hand still, Greg. Maybe that kind of tells you how old I am and my mindset of it. But I write down the price, the trend, the pattern, and the levels on these key indexes because it's good for my mind to have to and force myself to pick a number, draw it on the chart, draw it on a piece, write it on a piece of paper, and go with it. Let's go on to the volatility index next, the VIX. Greg, you are an option trader. If you're out there and you're listening to this podcast or watching this YouTube video, you can trade the U.S. options market from anywhere in the world. And even in Canada, the preferred options market you trade is in the U.S. Is that right, Greg?
Yeah, pretty much predominantly my trading, although I do trade a few Canadian equities, pretty much everything I trade is out of the States. The liquidity is just, it's that much better. It's companies that and understand. It's just the bigger market. The reality is us Canadians, we struggle a little bit with liquidity issues. So you got to kind of be a little bit careful when you're trading, the TSX or the Montreal derivatives or, those kind of things. So yeah, predominantly if I'm doing options, I'm looking towards the U.S. markets.
Sure. And the options market is priced using a concept called volatility, which is why we look at it each and every day as a part of our routine and each week during the market Skyline. Volatility index sitting here at 21. Noah had a saying last week that above 26, it's a good time for credits. Here at 21, you're kind of stuck in the middle. I still think options are relatively overpriced. I'm finding better credits right now than I have in a long time. Greg, how do you use the VIX? And are you seeing better cash flow credit trading opportunities lately like I am?
Yeah, well, if you look at this chart overall, I think this is a 6-month chart. I got it up here, or maybe a year. Back here, it was so disappointing, I guess is maybe the word I want to use. If you were trying theta trades back here when we were down around the 9, 10, 11 level there, it was some tough sledding. There was just nothing going on. And then recently with these down moves, we've got a pop in volatility. You can see that the candles have started getting bigger. The credit has definitely increased, and it's a lot more fun now if you're doing your theta trades for sure. Now the way I use volatility, at least the VIX in general from a chart form here, is what I want to look for is if I see weakness in the overall market, I want to see strength in the VIX, right? And if I don't, and the vice versa to that, if I see weakness in the VIX, I want to see strength in the overall markets. The interesting thing that I find is, we've had a bit of downwards move here. We've had a rebound from the downward movement, but yet the VIX really hasn't come down very much. And that tells me that there's still a bit of fear in the market. As you said earlier, there's a lot of traders concerned that, maybe a bigger correction's, in store for us. And so I kind of keep an eye on the VIX in that respect. Is I want to make sure that it's telling me the right story. And if it's not telling me the right story, then I want to pay attention to the overall markets even more so than I normally would. So
sounds good. Let's move on to crude oil, which is one of the top commodities in the world. I think it's probably the most important commodity to watch and trade regularly. Others would argue maybe a few different ones, but I think crude is right there. Very interesting. You had some volatility over the weekend. There were some attacks in Syria. I don't know if you saw the news on that. I don't want to get wrapped up too much in that. But when you see risk, crude oil can spike. And when there are, risks to whatever can happen when it comes to the supply or production side of it, then that can affect the price of crude oil. I like the pivot points here, Greg. I like the higher high, higher low, higher high, higher low scenario. Are you buying this bull retracement? How do you see that chart right there?
Yeah, see, we're kind of working into an ascending triangle here with these higher lows and higher highs here. The reality is my main concern with oil here is fundamental overall, more so than the news. I talk about this quite extensively in the commodity report, but U.S. Domestic production has just been screaming higher. They've been making all-time highs in production for quite a while now. And so we got the OPEC nations kind of battling back and forth against the domestic production, and my overall concern is if the OPEC nations decide to change their mind about how long they're going to keep this reduction plan in place, and the domestic supply keeps kicking up, that could mean some trouble for oil. Right now, we're just in a giant tug of war, to be honest with you, between say the 66.50 and the 60 level down here. I could see this just continuing sideways until that fundamental picture changes. And right now, I don't see any of that in sight. Russia's come out along with Saudi Arabia. They basically said they're going to do what it takes to keep the supply reducing, the stockpile, if you will, keep it reducing to get to levels that they're happy with. And at the U.S., I don't see any end in sight to them producing large amounts of oil. So, with that in mind, you got to play this technically, and technically we've got a nice little uptrend here. We're right down here on that line here. You could see a bump here. Now the only concern would be around the 64 level here. Obviously that's an old resistance point from here, but if we get a break above that, you've got a $2.50 move here pretty easily. So.
All I care about is that the high at 66.66 stays. For some reason, it gives me calming and peace. I do like, I don't know why. It's like playing Yahtzee. Somebody called it the mark of the devil. I'm like, no, it's like if you get 4 6s in Yahtzee or playing poker or something like that. I like all those numbers lined up. So move on to gold and the GC contract. Now, whenever I talk gold, I mean, I'm referring to gold and silver, although I do want to look at them independently and kind of talk about them. You're a metals guy. You watch metals, you trade metals, you hold metals, you do a lot with metals, and gold has been in a range now for months and months and months and months. With the risk in the market, Greg, historically, we would have expected, and the fear and the headlines and everything going on, you would have thought gold would have broken run, and it has not done that. What are you seeing in gold? I'm seeing consolidation stuck right in the middle. What do you see?
Yeah, I see exactly the same thing. I see a few things going on here. We've had some pretty decent economic numbers recently. That's given the Fed the green light to do what they want to do on a schedule. The reality is when they do things that aren't scheduled, that's when gold really gets a boost. That hasn't been the case, and right now there's inflation's not out of whack. There's nothing really to push this one way or the other. The fear in the markets, I don't think it's enough right now. If we saw some more major support levels start to break down, that might give gold the boost that it should have. But until the Fed gets scared, I think we're gonna sit in this consolidation for a while, to be 100% truthful. It's actually, this is a trader's dream, to be honest with you. If you're looking at this and you're going, okay, every time this thing hits 1365, I watch it confirm to the downside. You've got some pretty decent runs here if you can be patient. So, gold's not been bad in my estimation, but I do feel that with the world climate, if you will, especially with Mr. Trump and China having their little trade war spat there, I could honestly see gold being much higher than this. But I always go back to, hey, it doesn't matter what I think; it matters what the chart tells me, and the chart's telling me that it likes consolidation right now. So I'm a levels guy. I'm a real levels guy. That's my thing. I'm looking for this thing to get back up to 1365, and then if it breaks out, I'd love a breakout trade there. And if it curls back down, I'd be happy to see it come back down to 1340, 1320, even the 1300 mark. So.
Very good. All right. And last but not least, well, actually, two more I want to look at. I want to look at the dollar sign DXY. Now, some traders are going to prefer the UUP, which is an ETF symbol to track the same thing. This dollar index, the dollar is down in the last couple of days and it's been hitting its head. Overall, it had been consolidating for quite some time. That 91 level had been failed, attempted to break out a couple of different times, just could not do it. 90 and change, 90.50 right in there. Two red candles here. Would you sell the dollar here, Greg?
I would have liked to have sold it two candles ago,
Yeah.
but I still think it's got. It can definitely get down. I've got that line drawn at 89.50 there. That was kind of a big deal before. There's really not that much room to run here to before I got to that 49 or 89.50. Sorry, I'd like to sell it below there. I still think that we've got this wider consolidation over here. If it could break below 89.50, I'd like to get it down because I think it hits 88.50 pretty quickly. And again, this goes. We're seeing consolidation in gold, and the dollar's acting the way it typically does, and it's doing the same thing. So I'd be, like you said, I think it's just too close. Like the price right now is 89.86. I think you've got even to 89.50. That's not a big enough run, at least for me. But if it does break below there, then I say 88.50 is definitely in play.
Let's
So
put up the USD CAD cross pair, if you would. When I've got you on the horn here, definitely we got to talk about the Canadian dollar. Relative to the CAD might even be a better play. One of the things about trading forex pairs is it does allow you to kind of pinpoint and pick which one you would play. The dollar index is a measure against all the different commodities, but the dollar against the CAD is probably even weaker than some. That's a head and shoulders pattern right there, isn't it?
yep, certainly is.
So, are you bullish on the Canadian economy right now? Currency a reflection of the economy and kind of where things are. If this goes down, that means the USD goes down. The CAD is going up relatively. What's your take?
Well, the deal about Canada is we're very commodity based, right? Precious metals, oil, those kind of things. We're having we're having issues with our politicians and our oil industry here in Canada, so I'm not super bullish on that per se. This is showing me some weakness here, the U.S. dollar versus Canadian dollar here, which good for my countrymen. But the reality is I'd like to see this. Break this kind of neckline, if you will. If it does, then I could see a bit of a run. Overall, like from a fundamental standpoint, I'm not really seeing too much out of Canada right now that makes me think it's super strong. But I do like this little crossover here. We're a little late to the party for that, but that kind of shows us a little bit of weakness too. Like I said, we're right on the cusp here of a breakdown of a head and shoulders pattern. If it breaks there, you got some room to run for sure.
Yeah, definitely interesting. All right, let's move on to the Bitcoin contract slash BTC. Crypto, all those crypto nerds have been losing money this year. There's no doubt about it. I saw a news story over the weekend, actually, where the Rockefellers were, excuse me, exploring some interest in the crypto market. Even George Soros, who about 6 months or a year ago, he said that he would never play crypto because it's in a bubble and this and that. There's no regulation. Apparently, his hedge fund is moving towards investing in crypto. What's fascinating to me about cryptocurrency right now, Greg, is the public who got pulled into it late 2017. They all have the pain, the bubble pops, and they probably lose. Now they're out of it. And now I'm starting to see the headlines creep in to where maybe institutions are starting to look at it more viably. What do you see in Bitcoin right here?
Well, this is a very interesting chart because this first candle way back here, when the futures opened, I was like, okay, the professionals are getting into this now, and they are going to drive that down. And
Mm-hmm.
sure enough, they did. The one thing that I'm seeing now that's very interesting is, and it's hard to see here a little bit, but see how this is kind of rounding here, this
Mm-hmm.
rounding bottom. Typically, and of course, nothing's ever 100% in trading, but typically, when you start to see a rounding bottom, that usually gives you an indication that there might be a leg up coming. I would want to extend this little line that I've got here. Let me see if I can do that. Send that to the right. What I'd want to see again, it's the MAs aren't really helping us that much here, but what I'd want to see is it break above here. That would give us the end of that rounding bottom, and if it did, then I could see it for a technical play. I don't really know that much about Bitcoin, to be 100% honest with you. These are these kind of things I trade just completely technically. I don't get too concerned about the news of it. But when I see a rounding bottom in something, it's basically like a big neon sign telling me to take a look at it. So in this particular case, I would definitely do that.
Well, first of all, that's what we always teach people is to trade what you see, right? Far too often, the news and the emotions can start to drive opinions, and then you can start to marry yourself to them and whatnot. When one of the best things, if you ever want to get involved in an investment, what I love about charting is it's just pictures, right? If you can read the picture, you can trade anything. The fact that this is Bitcoin instead of an IPO that came out a few months ago, whatever it could be, same kind of basic information. And here we are at the bottom, potentially developing a double bottom. You would not call this bullish here today, though, right?
No, absolutely not. Like I said, if I see this start to move back up, that's kind of my confirmation. But absolutely not. You can only look at what you've got, and basically so far we've got lower highs and lower lows, even to not quite yet, but it's getting to that point where you could make a case that it's turning around just because now we don't have a lower bottom right here. Now this is not to say that this can't go a little bit further, but if this is a pivot, if this turns out to be a pivot point and moves up, well, now we've got a higher low, right? So definitely not bullish in any stretch of the imagination. But again, that's kind of what I said was, you see these rounding bottoms. It's not a hey, let's jump in sign. It's a hey, look, take a look at me kind of thing, and then you have to do your due diligence after that. So.
All right, sounds good. And this has been our market skyline for Trading Justice. The Trading Justice podcast is brought to you by Tackle Trading, which if you're watching this online, probably on the Tackle Trading YouTube page. And if you're listening to our podcast and you're a long-term member, go over and find that YouTube page and subscribe. That way you can get a bunch of different videos. There's tons of content over there that can be very, very helpful. We will be back right after these words with our feature presentation.